Well, good morning, everyone. Welcome to our Wednesday morning trading room. All right, so we just saw the markets open here a minute ago. This that I'm watching here, the NASDAQ, for those of you new in the trading room this morning, just a really quick overview of what you're looking at. I've got the Hawk micro scalper here in the top left, Falcon swing trader top right, Eagle trend trader bottom left, and the Raptor on the bottom right. I'm following the NASDAQ on this monitor, and I also have the euro, dollar, and gold open on my other monitor. So it looks like, if we take a quick look here at yesterday's session, yesterday the market really not going too far one way or the other. Even though there were some good swings here, it was a fairly sideways sort of day overall. That continued through the overnight. And here we are opening down here around the 62.60 mark. But we left off way up here around the 62.95 area, which was a pretty important number for us all day yesterday. So there's a little bit of a gap above the market. We'll see whether traders try to fill that gap or if they're going to continue to the short side. We're getting a little bit of a macro pullback signal here in the Hawk. The Falcon back to the trend line, so that may develop into what we call the trend line touch signal. Right now the seller's definitely busy. Here on the Raptor, we've also got our cloud crossover signal right down here near yesterday's lows, or at least the overnight lows. Okay, well, maybe I'll just give them a moment here. If you're interested in this number one signal, the market definitely seems to have a little bit of a downward bias. It's just a little bit early in the day for me. That doesn't mean that's necessarily going to be early in the day for you. You could look at taking the signal maybe on what we call the second push entry. Obviously, if we get below these lows, there's going to be a little bit of follow through as sellers try to run the market to the short side. My only concern is the buying that's going on here around the 62.56 area. Now, I may end up getting caught flat-footed here. Yeah, Mark. Well done. Mark says, good morning, Eric. Well, good morning, Mark. Mark says, my wife had to get out of town early this morning, so I was up trading early. I'm up 475 already this morning on that move lower from 5:30 my time. So let's take a look. Mark's probably doing that on the Falcon or the Hawk. Oh, I think he says here the Hawk. He caught divergence was indicated, and I stuck with it for a nice profit on 3 cars. So this first micro macro cross, oh, no, sorry, he said 530. Maybe this one here, the green bar sell. At any rate, well done, Mark. Good job. Nice start to the day. All right, some really strong selling going on now. I think we can safely say we are in a bear trend. Mark says it was on the Falcon. Oh, right here, the trend change. Coupled with the late filter entry. Good job. Okay, some very strong selling out of the gate. Somewhere through here we're going to see a little bit of a pullback. The hawk already producing a macro pullback signal. The only problem with this particular signal is covering the trade. Now that they've come down here so quickly, again, this is, for me personally, I would like to cover the trade up there. That's going to be a little bit out of reach for me, however. Might be able to get by covering the trade here. It is just a scalp after all. Although we've still got that momentum, it might be worth trying to run this one out. Maybe what I'll do is I'll just throw a single in and look at a 4-arrow consolidation here. So we've got 1, 2, 3, waiting on that 4th signal. Oh, not gonna get it, not right now. I guess technically there were 4 signals there, weren't there? The 3rd one didn't fire. Buyers are looking for a place to get in, and you can see each subsequent move lower has been a little bit weaker. Well, yes and no. It's still heading down. It's still very steep. Okay, a little bit of a pullback back into yellow bars now here on the hawk, so I need to wait for a 4-arrow consolidation there. The falcon already getting a little bit more bullish, actually. The trend line has flipped over there. Here's the 4-arrow consolidation now on the hawk. Oh, are they going to give me that signal or not? Oh, it's almost quarter to the hour. My least favorite time to trade. And what we'll do here is I'll roll my break even just a little bit down here, closer toward the lows, because what I'm trying to do is I'm still trying to capitalize on some of that early momentum that we saw. As I said before, I don't think the direction is the problem today. Rather, it's going to be more timing and stop placement. The Raptor coming into the hard edge. So whenever we encounter the hard edge, we always anticipate a reaction. So it's into the hard edge. I would look for a sell signal from here. You can either get ready for it or you can get ready on your sell button. Okay, now notice it came up short of the hard edge just by a tick or two. That doesn't really negate the next sell signal. If we still get the sell signal, I would still consider that to be a hard edge bounce, even though technically it hasn't touched the hard edge yet. Great question here from Frank, and we're going to take a few minutes and talk about that. Frank says, good morning. Well, good morning, Frank. Would we have a target gain for the day based on percentage of account or other calculations? All right. Well, first off, using an arbitrary figure such as the percentage of your account is not really what I would recommend. I think you're going to be better off using something that's actually chart-based for your calculations. One of the simplest things to use is the Day Ranger right here, this handy-dandy little tool that I have. And it shows you the 30-day average, range 10 and 5-day averages, as well as today's range and yesterday's range. Why is this important? Well, it shows you whether a market is expanding or contracting. In this case, it looks like the market's expanding because we're going from around 180 average to, well, yesterday was over 200, 222. Today we're also up around 200 already. So that tells me the market range is expanding a little bit. You could use the Day Ranger to say, let's say you wanted to take 25% of the daily range as your profit target. Well, if you deem the average range to be around 200, well then 25% of that, you're going to be looking at a 50-tick target. So you could enter that into your target right here, and you can say, okay, I'm going to look at taking 50 ticks on a trade. That's one way to do it. Another way to do it is to look at your last swing, and you could look for the market to recover either half or 100% of this swing. So let's say I wanted to do 100% on a breakout. This is usually a breakout type strategy, in which case my target would be down here at around 62.15. If I wanted to do half that, we're going to be around here, around 62.23. That's also another way to calculate targets. The third way to calculate a target, and my personal favorite, is to actually look at the risk amount used. All right, and sometimes you have to do these kinds of calculations on the fly. And, well, we're going to get tagged here in a second, so, or not. Yeah, pretty sure I will. Okay, so now, let's say we were looking at this 4-arrow consolidation right here. And let's say we took the trade like so. So this was our initial setup. The market heads in our direction, and we get the breakout. This amount right here, the amount that the market actually pulled back before it broke out, this is your actual risk amount, right? That's how much the market moved against you from this little low right here. That's the actual risk. This is what we anticipated the risk was, or could be. That's where I decided to say, okay, I'm wrong. I'm going to get out of this trade. But this is what the actual risk turned out to be. Okay, so once I know what the actual risk is, now I can start figuring out a risk-reward ratio. You see, this is why all that stuff you read about risk-reward ratios is a bunch of baloney, because most traders do it wrong. Professional traders do it in hindsight. Amateur traders try to do it beforehand, and you can't. You can't do it beforehand because you neither know your risk, your actual risk, or your reward. Okay, so now that we know our actual risk, we can try to figure out what our reward will be. Now, it's a little awkward the way I'm doing it here, but I'm just doing it for illustration purposes. This would be a 1-to-1 risk to reward, right? This would be a 2-to-1. And this would be a 3-to-1. This is our risk. That's our actual risk. This is an equal return on our risk. This is double our return on our risk. And this is triple our return on our risk. Oops, sorry, went a little bit too far here. Okay, so there's our trade. Now we calculate our risk reward. Okay, here's our 1-to-1. Did we make it? Oh, look at that. There was a little bit early profit taking. And are we coming back yet? No, not yet. But that's my personal preference for calculating risk-reward ratios. or profit objectives. But you can do, you can do, like I say, simple projections of the last range. That's also a very popular way, and it works surprisingly well. So we say, okay, here is the last range. Here's my first micro-macro cross. Computers are great when they work. There's my first micro-macro cross. I'm going to go to a tick, or pardon me, a click target. So I'm going to enter here. I'm going to cover up here, and hold on. Okay, so I'm going to enter here. I'm going to cover up here, and my profit objective is going to be down there. So all I've done here is I've copied this last swing, this last major swing. Now some traders will be looking at this swing instead. Which one is right? Well, it really depends which one you deem to be right. Let's take a look here at how these two different ranges translate as the market starts to head lower. Okay, so there's a little bit of a reaction right here as some traders were taking profit. Some got really anxious and took profit early. These traders here and these traders here, I would say, worked off of this last range. And the reason some of them are hesitating a little bit early is some of them sold the breakout right here. They got in a little bit earlier, and you can see the reaction, right? So that was their one-to-one. They retraced the last range. Others factored the breakout below that swing low. That's why there's some profit taking there. Okay, let's see what happens here now off of this big range. Oh, actually very little. They must have taken out quite a few traders on the way down. But normally, like I say, that's a very simple way and surprisingly accurate way to forecast a profit objective. A lot of traders do it that way. But that's a great question. I'm glad you asked it. Wow, way to go, Mark. Mark says, exceeded my daily goal on that late filter entry to the upside. That would be this one right here. It's just crazy to me how many trades I've been able to capture before the first hour of trading occurs lately. It's been high probability ones early in the day that have done really well. Most people don't will believe you when you say something like you can earn more money in 30 minutes than they can earn all day. Well, they just flat out don't believe you. They think you're a snake oil salesman. But that is the truth of trading. I know a fellow, he's a professional trader. He is glued to his computer constantly. I tease him that he's part cyborg because he's always got his computer nearby. He's always checking his charts. And that's fine for him. That's what he likes to do. He loves trading. He loves checking charts. He'll trade whatever market is the most active during whatever time of day he happens to be looking at his charts, and he does very well. For me personally, I'm more in Mark's camp, where I don't want to sit in front of my computer all day. I'm just as happy to trade the morning session That's a hour and a half, 2 hours out of my day. And a lot of times the afternoon, quite frankly, is a bit of a dud until closing. And I'm usually off doing something else by then. If I happen to be home, okay, maybe I'll check the markets. But yeah, it's true. A lot of the volatility, a lot of the action occurs within that first hour of trading. And those are always, or seem to be, the best times to take advantage of the market. All right, we could be in for a little bit of a protracted pullback now. We're kind of hitting the skids a little bit. Big sideways move here as the market begins to drift. And once you think the market is moving in a sideways range, again, the best strategy is to let it break out and show you that it can stay out. And that's either going to be higher or lower. Russell's watching here, the Eagle. He's asking, do we have a rule of three? Yeah, good eye, Russell. I would say so. We've definitely got a downtrend. We've already got a couple of signals against the downtrend, so we're producing buy signals. I would consider this close enough to be a test to the extreme. It looks like the market is trying to recover the downtrend, so far unsuccessfully. So if we come back and produce another buy signal, yeah, that might be worth trying. Coming back yet with another sell signal, however, and the trend definitely down, so we don't want to get stuck so focused on counter trend signals that we miss the with trend opportunities. Here, the Raptor coming back with yet another number one signal, not outside of that trading range just yet. So if you choose to take it, you just need to be aware that this is still within the larger trading range. If this is an acceptable amount to you, then by all means take it. Otherwise, you may want to hold on a little bit longer until you see who's actually going to be stronger here. But it is a valid signal. It is a valid cloud crossover signal. And you do have a chance at what we call that second push entry. So in other words, we're going to look for some renewed momentum to bring us in. There is a potential for a breakout here because, well, we've got buying going on here. We've got more buying here. We've got more buying here. If the market trades through here, well, we're going to start executing some exit orders from those buyers, and those in turn are sell orders. So we may end up encouraging a few buyers to leave their positions. See, now we're coming back with the counter trend signal with the number 2 signal, and that just confirms that we're in a little bit of a sideways drift here at the moment. You're going to find that certain markets, you're going to be better able to trade certain market conditions. Like for me personally, if a market is moving very quickly, I've got a hard time keeping up. But if it's a slower market, I usually tend to do a little bit better. Not quite as slow as the market has been. That's a little bit too slow even for me. Scott asks, I'm journaling and I use trade entries to zero in my trades. When I trade on the Falcon, the price markers are not shown on the other birds. Is there a way to show my trade entries between all the birds? That's a good question, and I don't know. I'm assuming you have the same account between all your birds. It's not a different account number. If it is the same account, you could try refreshing your screen. That's F5. Just make sure you don't have an open trade going on when that happens. If that doesn't work, I'm afraid I'm at a little bit of a loss. But that would be a good question for Ben. Ben's going to hate that I keep referring him, but honestly, if I had the answer, I would tell you. But Ben's email is support@indicatorwarehouse.com. And that would be a good question. If there is a way to do that, he would certainly know about it. So you may want to give him a call or send him an email. And Ben's pretty quick to respond too. He'll give you the goods on that really quick. Okay, the eagle here completing the rule of 3 signal. So there's the counter trend trade. You could be long on the eagle already. And that is turning out very nicely. Thanks, Russell, for pointing that out. That's almost a textbook rule of 3 right there. Got the first micro-macro cross going here in the hawk. A trend change signal here in the Falcon. It's a little bit out there already. So you got to run a fairly deep stop, at least to start. And now here on the Raptor, we're going to get a cloud crossover also. So the clouds not fully crossed, but very, very close. And just need a little bit of a pullback here before we can try to get bullish on that market. But there are, like I say, other opportunities there already. I don't know. I don't know if the buyers got enough in them today or not. That's pretty ambitious, but the stock index has been very bullish. Oh, there's the crossover buy forming. So at least as far as the Raptor programming parameters, the conditions have been met. I would actually prefer to see a little bit of a deeper pullback here, but we do have a chance at a second push entry. My concern at this point is that the market is turning into a gigantic bear flag. In which case, this is obviously not the place to buy. Ooh, and I think they slipped. Oh dear, I think they slipped me quite a bit. Yes, they did. That's crazy. Got slipped 3 ticks on that entry. That's not good. You don't normally see the NASDAQ slip you that badly. That's pretty crazy. And it's starting to look like that was a big sideways channel. Frank writes, daily profit goal can be around 25% of the daily tick range per contract. Thanks. This can be helpful to keep from overtrading. Overtrading is the bane of all traders. And it's the biggest problem to overcome. One, or maybe not the biggest, but certainly one of the biggest. Another surefire way to keep from overtrading is just to set a daily quota for yourself, where you look, 3 trades is my personal favorite. And I will show you why here in a second. Oops. Okay, we'll just take a little detour here while our trade is progressing. There's all kinds of coin flipping type programs on the internet. This is just one. But let's say we're going to take a look at trading, well, let's do 6 times a day. Because there's a lot of traders who will trade at least 6 times a day. And let's say we're going to be flipping a penny. Now what we want to do from here is we want to see how many times can we flip heads in a row or tails in a row. Okay, well here we flipped 1 tail, and after that we were able to flip 3 heads, but we weren't able to flip two tails in a row. Let's do it again. Oh, this is very unusual. I've never seen this happen. 1, 2, 3, 4, 5 tails all in a row. All right, 2 heads in a row, 1 head. 2 tails in a row. I'll just do a few more here. Wow, this is crazy. I've never seen this happen either. 4 heads in a row. The odds of that, let's see, well, this is 50-50, 25, 12.5, 6.5%, 6.25%. Only 6 times out of 100 will that happen. 1 head in a row. 1 tail in a row. 2 heads in a row. 2 heads in a row. 1 head in a row. Okay, what I'm trying to prove from this exercise is that the chances of getting more than 2 consecutive flips is fairly remote. Here's one that's 3. Here's another one that's 3. Here's one that's 2. So your best odds are obviously 1 in a row. 2 in a row happen relatively frequently, and occasionally we got 3 in a row. Here's another one that's 3 in a row. Your trading should be in a similar fashion. You should be not looking to take 5, 6, 7 trades in a day. Rather, you should try to limit your trading to, well, ideally 1 trade, but if you can't do 1, then 2 or maybe 3. The idea is that you're going to have better probabilities by trading less often, because essentially your trade is very much like a coin flip. In fact, if today was going to be a slow day, I was going to demonstrate a little scenario that I did a few years back when on an internet trading forum I was trying to drive home the point of trade management, how important your trade management is to your success. And I told the people in the room, pick a market and flip a coin. Heads we go long, tails we go short. No, assortment of indicators, no fancy strategies, just flip a coin. Heads we go long, tails we go short. So there was a wise guy in the room, and he said, all right, trade butter, trade the butter market. Okay, well, I said I'm not going to do the butter market with real money, but we'll certainly do it in sim. I've never traded, up until that time, I never traded butter. But I said, okay, somebody flip a coin, heads or tails. And I know people were looking at the chart and they were thinking, yeah, we're gonna, this market's in a downtrend, we're gonna tell Eric heads. And sure enough, it was similar to this. It was heads. So the next signal I bought, and I managed a profit out of the trade. It's not that the market made a huge run up or whatever, but I managed a profit. There were a couple of losers in there, but I kept the losses small, and by the end of the exercise, I was up like $1,500 by flipping a coin. So this is why you'll hear me get up on my soapbox all the time. For those of you who are determined to find that next shiny indicator to eliminate all your losing trades, that's not where it's at. Yes, there will always be a nice shiny new indicator, and yes, it's fun. It's entertaining. Adam calls it mental masturbation. And in a way, that's so true, because it gives you something to do. When in actual fact, the money is made in how you manage your trade, in how you manage your funds, in trying to pick the highest probability signal. And I know you're probably getting tired of me telling you this all the time, but it's so true. I've heard, and I've never tested this, but my experience with other people tells me that this is true. Someone said you could take a system that produces an 80% winning signal and give it to someone who has the wrong attitude about trading or about their money management, and they will still lose money with a system that performs 80% of the time. I know it seems impossible, and yet, like I said, my dealing with people tells me that it's probably true. Okay, I'm gonna, if I get another uptick here, I'm gonna get this trade to break even. And I can probably start to roll my stops here. Actually, you know what? I'm just going to take it to break even now. There we go. That's all you get. They're taking a little bit too long here, and I know the trend is down. I don't want them to trade back below these lows, because then the market's obviously going to head the other way. The other thing with your overtrading is that you need to have a safety net, because there's going to be days where the market's just not cooperating. Fortunately, it doesn't happen that often, but you need to have an amount that you're prepared to walk away from. If you can't think of an amount, if you don't have a pain threshold, an amount that makes you squirm in your seat, I would recommend 5% of your trading capital. That's usually a pretty good ouch. You give the market a half-decent run, and if you're down 5%, well, that's still an amount that you can recover from probably in a couple of 3 days. So it's not going to wipe you out entirely. Mark writes, I use a flat dollar amount and stop when I either hit or exceed it. I tried to do that with no more than 5 trades, and I've been very selective on what I take, obviously. Alternatively, I've had 3 losers in a row. I stop, and I live to fight the next day. I like that. I like that. I think that's a great idea, Mark. You know, because if you take 3 losers in a row, something isn't working quite right today. Mark writes, lately, though, I've been pretty lucky and been done with about 2 or 3 trades, and very few have been losers. In my opinion, it's all about only taking the high probability signals and filtering out all the other noise. And the fact that, you know, Mark's restricting how many trades he takes, that's a big deal too, right? Like if you take every signal that comes your way, some are going to win, some are going to lose, but at the end of the day, will your losers outweigh your winners? And unfortunately, that's not usually what most people want to hear. Most people want to hear, tell me the best settings for my stochastics. Tell me my best settings for RSI. Scott says, what are the best settings for my chair? Yeah, Mark says there's only 3 DTS signals I look for, and then my own divergence trades. That's it. Everything else is just noise to me. And let's see, do I still have my daily chart? Yes, I do. I know traders who will not trade when the market is obviously sideways. And this is a daily chart, but it could be an hourly, it could be a 5-minute chart, it could be whatever. The charts are all the same. They consider this the abattoir. For those of you who are rusty on your French, that's French for slaughterhouse. Because the market has no discernible direction through here. The traders are just beating each other up. Once the market gets outside, though, and it proves to you that it can stay outside, well then, okay, there's something we can do with that. Personally, I think we're going to be a little bit better off to the short side. I can see the market trying to maybe get back down here to this low. We do have an alternative channel here, so a move back. Look, just eyeballing it, looks like around 6,200 is a definite possibility. Well, we got the market inching higher. Got a couple of red bar sells, or pardon me, red bar buys here in the hawk. Those tend to develop near the end of the trend. So certainly after I've seen 2 of them, I would start to get a little bit leery about the upside. Falcon breaking up a little bit. Eagle, great little run up from that rule of 3. And what's going on here on the Raptor? Producing a couple of counter trend signals. Those number 2 counter trend signals do work a little bit better after a hard edge bounce signal. That's the number 3. But we'll have to see. Oh, look at this. Now, after all that, we're producing another first micro macro cross. So the buyer's not out of it. You could look at doing the second push. Maybe, I don't know if we can run this out or not. Oop, come back here. So the scalp target would be right there. That's where I will put the break even. It's definitely a risky trade because of these double red bar buys that we have. Hey, way to go, Scott. Scott giving kudos here to Mark. Scott writes, Mark was very kind to share what he likes, and it has for this month given me 11 trades and only 2 losers. Thank you, Mark. And you know, the reason I read you Mark's comments, and Mark has written me about this as well, is not to, you know, make himself something. Rather, Mark only posts these things to try to encourage you that we're all in the same boat here, right? And this is what's working, and it's easy for me to sit here and say, yeah, this is what you should do, this is what works. But it's always nice when someone like Mark says, yeah, hey, that actually does work. Do it. Yeah, way to go. Scott says, and one of those losers was a knee-jerk button, not using the rules. And aren't those the ones that always get you in trouble? The ones that you're shooting from the hip, the market prints a couple bars really fast, you just have to get in the trade, and then of course it reverses and heads the other direction. Those are always the problem ones. Yeah, Frank says, I know I bite. And you're not alone. You're not alone. People would disagree with me on this, but I've often said that the trade that looks the worst is probably the one that's going to work out the best. The trade that really has you wondering, should I really take that trade? That's probably the one that you should get into. All right, well, the buyers have got to get busy here because we've just drifted back into yellow bars, and that's not good. So I'm going to start rolling my stops if I can get another bar or 2 in my favor. Hold on here a second, Frank. Frank's asking, what's crude oil looking like? I've actually been, well, I haven't been paying much attention to gold today, but I've been watching the gold market a little bit more because crude has been so dismal. But 1 second and I will bring over the crude oil chart. And this is what I mean. Is December the right month for crude? That seems really, really quiet even for crude oil. So crude inventory is out, well, now, and not much to it. Yeah, just really, really flat. And that's been crude oil. Yesterday's session, pretty quiet. It looks like a lot of the action is actually coming in the overnight. Oh, sorry, that was yesterday out of the open. But you can see that even so, a lot of the trading has been going on in the overnight. Crude, just nothing going on in crude right now. It's not the market it was, that's for sure. Crude used to be all about the volatility. Okay, we're struggling here. I'm going to bring my stops up below that swing low right there. That's all they're going to get. It seems we can't really get a breakout to stick here. And these yellow bars that are cropping up in the Hawk and again here on the Raptor, they're not quite as prominent on the Raptor because of the settings, but they do indicate a fairly neutral market condition. And that's kind of what happens at this time of the day. The markets start to get really quiet. All right, well, maybe I spoke too soon. Maybe I should have said that a while ago. Got a little bit of an uptick. The buyer's getting busy, and I don't know, given the way the market's been, I don't think I'm going to let too much of this open profit get away. There. That's all you get. The bar high-low strategy, a very aggressive stop strategy. Elmer is asking, Eric, a bit off track. I know you don't do this, but if you wanted to set up a trade aiming for a longer run with a trailing stop, how and with which stop would you do this? Well, actually, Elmer, I do attempt to run out a lot of trades, but usually earlier in the day because it seems that's when the momentum is there. I think if you're a smaller account trader, you're almost always going to be better off taking profit on target, just going all in, all out until you get a little bit more accustomed to trading, get used to the pressures. I think there's a lot to be said for banking open profit. Now to your question, how do you set up a running trade? Well, the easiest way is on your trade managers to make sure that your target 1 percentage or all your targets are set at 0%. That automatically defaults everything into the runner position. So we have R percent at 100. That stands for runner, not Williams percent R. So this means my entire position will be running out. If you wanted to take, say, half your position at a specified profit objective, well, you can do that as well. Or a third, or a quarter, or whatever you like. Regarding which stop strategy is best, I tend to vary my stop strategy depending on how I think the market is performing. The market seemed a little bit reluctant through here, which is why I've gone with the more aggressive bar high-low strategy. But normally what I do is I will just select a stop strategy and I will see how does it fit the day. Does it look like it's fitting the market pretty well? Well, then I'll go with it. If I think I need to adjust it a little bit, and that looks a little better to me, then I'll go with that. If, let's say, for instance, I took this first micro macro cross and I was trying to run out all these swings, well, then I would probably need to go with something even more conservative and maybe even dial it up a little bit. All right, so you can go with whatever stop strategy is suiting your objective. That's why we give you so many different stop strategies. To start, the starting stop strategy, usually I find the best one to be the swing high-low because it's the most fundamentally sound. So let's go back to the first micro macro cross signal here that I took. If I looked at the swing low, it would tell me to place my stop right here. Now, if this amount is uncomfortable to you, then you need to adjust this value right here, not bring your stop in tighter. As the trade progresses, note the swing strategy has not rolled yet. I would still have all this open profit and all this at risk. That would be a little bit too much for me. So at that point, I would probably look at a different stop strategy. The parabolics I like a lot. Oh, notice that the swing has now rolled up here. The parabolics I like a lot because it tightens the stop as the market momentum diminishes. And as the market is trying to develop a trend, it leaves the stop a little bit further away. Essentially exactly what you should be doing. So those are my two favorites. When I start, I like to maybe start with the swing strategy, and then as I accumulate more open profit and it starts to get a little bit uncomfortable for me, I'll either move to the bar high-low strategy or the parabolics, which will protect more of that open profit and still give me a chance to run the trade out if there's another swing higher. But maximum staying power, swing high-low strategy to be sure. But like I said, a lot of times I'll just open up a chart and I'll put the stop strategy on it and sometimes I'll need to tweak it a little bit. And I'll say, yeah, okay, that looks like it fits pretty well. Let's go with that. All right, well, I've almost dug myself out of my earlier hole. It's still down about $20 or $30, but close enough to call it a rounding error. Close enough to call it even for my stupid trade that I did earlier. Well, the buyer's really getting busy here. Got another macro pullback. A hard edge bounce signal would be nice here on the Raptor. Still can't believe the follow through on that rule of three signal. That's one for the textbook right there. Beautiful. So our first in sync eagle signal right there paid off big. The counter trend trade paid off big. That's two trades. One thing, just thinking about Elmer's question. So there's the one trade there. And then here comes, they come back with the counter trend. There's two trades right there. That's a very profitable day on just two trades. Thinking about Elmer's question about running the trade out a little bit further. It's always nice to catch a runner because obviously, well, as you can see here, the runner, you would have earned twice as much as just taking profit on target. There's easily $400 in open profit on this trade, on just one trade. And same thing with this big move to the downside. You could have easily made another $400 to the downside and another $400 to the upside. You're pushing a four-figure day trading single contracts, which is huge. So the incentive for having a runner in play or trying to run out a market is always there. And if your account allows, it's a good idea to try to keep a runner in play. Most traders will do this by what they call scaling out. So what they'll do is they'll, and ignore my stop parameters here for a moment, but I'm just doing this for illustration purposes. Let's say you're able to take 4 contracts on a position. Okay, so you're able to take 4 contracts on a position, and the trade starts to go in your favor. On this first hiccup, right here, as the market trades down, traders will maybe take half off their position. So now they have 2 contracts in play. On the next hiccup, they may take another contract off. So now they have one contract in play, and they'll try to let that one run out as far as it'll go until it either stops out or they just take their profit on it. That's called scaling out or partial positioning, or there's different names for it. The idea is the same, that you're able to capture some profit while still leaving a runner in play. Now, of course, that means that you have to be able to trade more than one contract in order to do that. But it's a very effective strategy. It takes advantage of both banking profits, same as an all-in, all-out strategy, and having a runner in play. So that's the ideal scenario, if you can pull that off. But you also need to remember that trending markets ranging like this, big ranges, only occur about 25% of the time. The other 75% of the time, we're trading more like this, where you may get a signal Okay, so you get your trend change signal, and whatever, we set it up like this. You get your signal, and oh, all right, well, it didn't make my point, but you get the signal, you get up to the profit target, and that's all you get. Right? A lot of times, 3/4 of the time, in fact, the market will not trend a great distance. Maybe this would have been a better example here. So we got the red bar buy. The market goes up, hits our profit objective, and stalls shortly thereafter. That's what happens 3/4 of the time. But the other 25%, like I say, when it does happen, it's very nice to take advantage of. We're producing a counter trend signal now, getting yet another red bar buy here in the hawk. The red bar buy is also our counter trend signal in the hawk. I don't recommend going in heavy on a counter trend trade. Maybe take a single. We've got the number 2 signal here on the Raptor as well. Might be looking for a little bit more test to the extreme here, that little hiccup. So once again, we're retesting the highs, looking for that failure. The Falcon working a possible trend change to the short side. With these red bar buys on the hawk, you don't need to trade them counter trend. You can simply use them as an early warning that the trend may be changing. Did we get a green bar sell? No, we didn't. Well, here it is. So here's a green bar sell. You could have bought the failure of it, but the first micro macro cross triggered just a few ticks later, a few bars later. Well, looks like the buyers aren't quite done yet. Coming back with yet another first micro macro cross to the long side. That's crazy. Yeah, and it looks like that's not going to hold either. So here we come again with that first, pardon me, that macro pullback signal. Doggone it, Eric. Red bar buy signal. Getting a late filter entry / trend change signal here on the Falcon. So another selling opportunity. And a second chance at the number 2 signal here on the Raptor. So a couple of things lining up for a possible counter trend. But overall, the market's still very, very sideways. This is not a trade that I would get too excited about, not yet. The market's just a little bit flat. You can just see the momentum or the lack thereof. But a move to the hard edge, I could see that. That seems probable. The Raptor now confirming the topping, giving us yet another number 2 signal. All right, and they're gonna put in another rally, are they? Is this a little bit of a bull flag? And There they go. Well, all these yellow bars again, they're taking all the fun out of it. All right, well, it looks like we got another little bit of a rally going on here. So we'll close that up. We will cancel this as well. The buyer's obviously not finished with the day. But I think I am. If you're going to continue trading this afternoon, I think we're going to see a little bit of upward bias, at least maybe until near the close, at which time I think the sellers may step up again, try to knock the market down. But that remains to be seen. I would have called this trend down today, but obviously the buyers doing a pretty good job pushing us back to where we started the day. I will be amazed if they happen to get into that opening gap. But hey, stranger things have happened. All right, gang. We'll see you again tomorrow. Talk to you then. Bye for now.